Okay. Yes. Wanted to go through this. Show you what I saw. Yeah. Take note of the candle after hitting the down close candle. I have 3 points, midpoint, upper, lower. Reason why I didn't do this one, because I wait for the candle close, which is that one. So there you go. So then afterwards I will look for some action or look for something to take place. Either like this, like so. Normally right there to there. Market did what it did. Had an entry. Well, I didn't have an entry, but if you was to take a trade in here, could wait for the next candle, and then. But I was not looking at that because I see initially what took place on this candle. No, this candle. I'm expecting something to take place because it didn't do it a displacement. So I'm thinking, okay, cool, maybe let's see what happens. And then you see a wick basically taking out this relative equal low. So I took that out, well, wicked it. So then what we do, use another fib right here. Can take this one out because we see that really this was the biggest fair value gap of this. If you don't, I'll have a little confirmation. Look at this. And as you can see, it's bigger than this one. So it's the most relevant, this one. From the market expanded from here. So I want to be focusing in anything above the 25%. Go down to the 15. So now we're focusing in on this leg and seeing how and what the market does on replacing it. It can be classed as a confirmation, because what takes place is the upper, the market wicked this relative equal low, wicked it to the upper down close candle, but this is 1 o'clock in the morning, so of course no trade for me. But then even if I was to 40, 75, 40, 75, so I front run 40, 75. No, still timed in price. This was not in the time I required to trade. So, but we still see the market, it made a double bottom, but it's still respecting this down close candle. So once that happens, you can imagine that so in my eyes, this has relevance due to it being the midpoint of the closest candle below the 25%. Okay, so then market came up, made a relative equal high. This place, fair value gap. This would be the order block. Market came back down there. If she wanted to, one could go down to 5 minutes and try to look for entry while the market retraced. Yeah. So you see some action taking place. So 10:15, personally I would have got in because it's just squeezing in to my close time. So I stopped trading from 10:15 till 12. So that would have just made it. And then again, didn't fully displace this calendar, fully displace over here. But what we can do, if we didn't feel like the market didn't fully give us the green light, one can go down to the 5 minute and wait until the market tells you to say, okay, I am looking to go up. And then you could kind of see the signal from this relative equal low when it wicked here. Say, okay, time to go up. But me personally, because I kind of understand the whole buy phase right here, the order block right here for the push up, fair value gap. I see no equal lows not taken out. So from this equal low bound to get out, gonna wait. So I would think that this low wouldn't get touched because it still has the incentive of creating wicks to the downside. So I would think that, okay, it has more intentions to go to the upside. So stop loss 45.50. So 45.50. Stop loss would have been there. I don't put my stop loss exactly where it is, so I give it a little bit of breathing room. So I would do 4 pips below the order block's low, which would have been 45.50, which is 45.50, which is the market did come close, and then did what he did. And of course, my theory is order blocks, and yeah, that's the overview of that trade. And yeah, adios.